Moving over to commodities, all that glitters is proving to be gold. According to the World Gold Council, demand for the yellow metal increased 5% year on year. Total demand in the meantime exceeded $100 billion for the first time on record, supported by strong investment in a record high price environment. And joining me as we unpack that print is a senior analyst for EMEA at the World Gold Council, Krish Gopaul. Thank you so much for your time, Krish. Let's actually start off with that high price environment, because it's really been increasing at breakneck speed. Is the macroeconomic environment supportive of continuing momentum in this price?
Yeah, you're absolutely right. We've continued to see new record highs set frequently so far this year, nearly 40 different peaks. And what we can see is that you're absolutely right that the macro environment certainly has played a big role in this. If you look at the geopolitical environment that we're in and the unfortunate events that are going on around the world, the economic uncertainty that we've got, all of this provides a kind of a heightened level of concern for investors around the world. And naturally, they're looking for ways in which they can protect themselves against these risks. And gold has been a beneficiary.
Yeah, and indeed we have had quite a few analysts and quite a few institutional investors talking about the target prices that they have for gold. Now, I think the last time it was over $2,700, but now a lot of them predicting that it will go to around $3,000. Of course, there are different products and use cases within gold. Where are we seeing buyers flocking to here?
So understandably, given the price performance that we've seen, investment has been a major area of interest for investors. We start with the ETFs. We saw the first quarter of inflows for some time, and that was really led by Western investors returning to gold through ETFs, particularly in North America. We also saw increased interest from the OTC market, and that's been increasingly driven by institutional and high net worth investors. And so that idea that we're seeing kind of that heightened price is really being supported by the demand, specifically in investment. Now, when we think back to where we were earlier in the year, the big story was central banks, and they continue to be very healthy buyers. When you couple that with now the additional interest we're getting through investment, you can understand why the gold price is being well supported currently.
That's actually very interesting. But also let's talk about the other side of the coin. And yes, pun intended here. Where are we, seeing maybe a slowdown in the demand in terms of the use cases and the products?
Yeah, there are obviously, it's a double-edged sword when it comes to high prices. And if we look at the bar and coin segment first, we saw that actually fell 9% year on year in the third quarter. Again, that was primarily in some key markets such as China and Turkey, and that was offset by other areas such as India. But overall, it did take it suffered a little. And then if you look at the jewelry market, again, that in the face of higher prices caused issues with affordability for consumers around the world, especially in the face, in some areas, a cost of living crisis. So understandably, jewelry demand took a bit of a hit. That was down 12% year on year in the third quarter. So while there were kind of areas of positivity during the quarter, there were also some areas of weakness.
And actually, just before we get into the supply side, as we're talking about demand, because you were talking about, institutional investors, high net worth individuals going into the OTC market and also the ETF market. I'm wondering if there is any appetite from retail investors at this point that you're seeing.
Certainly, there's always interest, but I think at the moment, looking at the bar and coin segment again, I think it shows that there are challenges there. The weakness in the markets that I've mentioned previously mean that overall we've seen kind of again that affordability angle kind of come into play, where consumers maybe are less available income to divert to gold products as investments at the moment. But that's not to say that we haven't seen some areas where we've seen the kind of consumers look towards gold. In the US, for example, there's been headlines about gold buying through Costco. So certainly it's not a uniform picture.
All right. Well, let's go into the supply side in terms of mining production. Did that match demand?
Yeah, we did. We saw a 5% increase in gold supply in Q3, and that was due to both an increase in mine production, which hit a new quarterly record in Q3, and we also saw an increase in recycling volumes, up 11% year on year. Now, on the mine production side, we've continued to see a very strong picture on mine production. Each of the 3 quarters this year have been records for those respective quarters, and it's certainly looking like we're on course for a new record high this year. And some of the areas where we saw growth in the quarter were, big mining jurisdictions such as Canada, Mexico, and Indonesia. So on the face of it, we are looking at a really strong year in terms of mine production. But again, that's not without its challenges. We have also made note in the report that there are challenges faced by miners in the face of higher costs. So it's certainly not necessarily all positive, and it's not without their challenges. And on the recycling side, as I mentioned, we saw an 11% increase. Unsurprisingly, given the higher gold price, consumers have opted to maybe sell back a portion of their gold reserves. But certainly what we're seeing overall is actually there is a less near market stocks of gold to come back onto the market, which means that maybe the increase that we've seen in recycling doesn't quite match the increase we've seen in the gold price.
Well, let's talk about the overall outlook for the full year on gold. What does that look like?
So I think overall we still see challenges in the face of the higher gold prices that we're seeing at the moment. Certainly on the kind of the fabrication consumer side when it comes to jewelry and it comes to technology. Certainly central banks look like they're still going to post a very healthy year in terms of their demand, even if we believe it's unlikely that they might reach the levels that they did in 2022 and 2023. And on the investment side, we still see a relatively positive picture going forward, given, as I mentioned, the price momentum and also all that geopolitical and economic uncertainty that we've still got. And that's before we throw in the US election as well next week, which again is another huge event in the market, which could have a kind of a long-standing impact.
All right. Well, thank you so much for your time and giving us insights on the gold trends that we saw in the third quarter. Krish, that was Krish Gopaul from the World Gold Council.